Okay, I think we're a couple of minutes in now, so I think we'll get started. So just by way of an introduction, I'm Rob Clegg. I'm the Head of Product Sales and Consulting here at Equifax. I'm also leading the Redress program from a go-to-market perspective. And as a result, you've got the misfortune of me as being the host today. So welcome, everyone. Hopefully it's going to be an enjoyable next 45, 50 minutes as we go through things. So from an agenda point of view, I think we're going to probably touch on four areas. So obviously it's a really big week in the redress domain with the announcement on Monday. So I'll be getting some industry experts to dissect that for us and just give some understanding of what the marketplace is thinking. And then I think we'll be going into what I'm defining as three gap areas. So the first one is the data gap area, and I'll be getting some understanding of that. That particularly links to the new definition of Scheme 1 and Scheme 2. I think the second one is the memory gap, in particular looking at people and their inability to think back about when they took these agreements out and therefore the quality of data that we've got. Just as part of that, we'll be linking into a live demonstration of the Equifax app that you may have heard about or seen on the Martin Lewis show. So hopefully that's informative. And then the final piece will be looking at the process gap. So consultation paper on Monday talked very much around this 3 or 5 month implementation window, depending whether or not. Sorry, I think we've got one person who can't hear. I'm just checking in if everyone else can hear at this point. Yeah, okay, good. Sorry, it must be just one person that's struggling with that. So, yeah, we basically got those three gaps, which is the data, memory, and process, and the process is very much aligned to Scheme 1 and Scheme 2 implementation periods of 3 and 5 months. So just by way of a bit of housekeeping as well, I think a couple of people have kind of found the chat button already. So you'll see down at the bottom, there is a chat function. That chat function, I will be monitoring throughout the whole of the day. Hopefully, I will be able to intervene in some of the conversations and raise some of the questions that you've got. So please do feel free to raise them there. If not, we will have a wash up at the end and hopefully have 10 or so minutes where we can ask some of those on your behalf. So at that point, I just wanted to introduce the panel. So without further ado, Adrian, would you like to introduce yourself?
Yes, thank you, Robert, and good morning, everybody. My name is Adrian Daly, and I lead on motor finance at the Finance and Leasing Association.
Thanks, Adrian. And Jason, over to you.
Yes, my name is Jason Warsaw. I'm Chief Executive of the Consumer Credit Trade Association.
Thanks, Jason. Anne, if you'd like to introduce yourself.
It's very brief. So I'm Anne Morley. I work within the Equifax product team, and I have responsibility for a number of solutions we brought to market to support the redress scheme.
And last but no means least, William.
Good morning, everybody. William Napier here. Yeah, I lead product for consumer solutions and our core open banking services. My focus for this year is to talk the app through that Robert alluded. We've done some great work of bringing to life the data that consumers get into their hands.
Brilliant. Thanks all. Okay, so going back to the agenda then, I think it's probably wise if we just kick off with the first question. So Adrian, obviously there's a big announcement that came out on Monday, and I just wondered if you would give us an update from the FLA perspective on what you see as the significant changes and what that means for your members.
Sure, thank you. So I take it that most attendees have seen at least something in the news about what came out on Monday, but fundamentally, the scheme that's been finalised by the FCA is similar. It's the same basis as the original one consulted upon. Key difference is it's now two schemes rather than one, two near identical schemes, one pre-2014, one post-2014, with some subtle differences in requirements. The basic taxonomy of the schemes or skeleton of the scheme remains the same, and essentially what FCA has done is focusing on a few areas where there was feedback from stakeholders such as the industry, and made some refinements, especially rebuttals, or fine-tuned some rebuttals and added some new rebuttals, some of the key triggers for redress, and there's been some tweaks to the redress formula as well. But fundamentally, it's the same scheme as what was consulted on. with a few tweaks to the engine, as it were. The key thing, as you mentioned there, Robert, is introduction of a 3-year transitional period, 3-month transitional period, if only it was 3 years, to introduce this for recent cases. For older cases, it's 5 months. So yes, I think the focus of the industry now is very much on using the 3 months, the 5 months to the full to make the transition required.
Okay, brilliant. Thank you. Similar question then, Jason, coming to you.
Yeah.
What do you think the key challenges will be? Adrian alluded there to the fact that there's this challenging period now of 3 to 5 months. So if you could specifically pick up on, the broader challenges and specifically that window that we're all now working towards, which is almost like a race against time, I feel.
Yeah, maybe it's useful just to introduce a little bit about what we're particularly interested in. I think Adrian needs no introduction. We speak to Adrian a lot about what's happening in motor finance. He represents a much wider group than we do. We are more focused on kind of independent, smaller lenders, and brokers tend to be smaller in size. So a very similar agenda, but there'll be a slight difference in the priorities that we have. So our members are more interested in the operational issues, have always been interested more in the operational issues, been less interested in DCA, less interested in the tied arrangements. One of my members, for example, told me that the cost of operating this scheme as laid out originally would have been 100 times the cost of any redress that they would have been paying out. So we've always been more interested in that. So we welcome some of the changes that are there in terms of streamlined communications, de minimis exemptions, moving 35% to 39%, caps on redress. All of that is really positive and absolutely the kind of things that we've been campaigning for over the last few months. And I think, but one of the things I would say is that, and I've said this to the FCA many times, is that many of our members are going to be starting now from a standing start. Because if you prepared using the plans that were set out, then you'll have already set out a mass campaign system with recorded delivery and a fulfillment center and a contract for that. They'll continue on for the next year. Of course you haven't. You wouldn't have done. Hopefully you wouldn't have done that because you were in a very different situation. So many of my members will have stopped and now thought we'll be now looking at this today, looking at what the practicalities are. But that does take you to that implementation period, Robert, that you mentioned, and it isn't going to be long enough. We think for many of our members, they will do their best, but there's so much to be done now over the next 3 months, over the next 5 months. And the most obvious problems are things like putting those operations in place, the scaling up of the operations, particularly for smaller lenders and smaller firms that maybe don't have big teams. There's the interpretation risk. There's a lot of ambiguity left in there, and we need to work on that. But one of the big issues, I know that an issue that you're particularly interested in, is that data gap as well, that we are going back to 2007, and that is going to cause problems. We've got a little bit more time around that earlier scheme, but that's still going to be a big issue for us going forward.
Thank you very much, Jason. Yeah, I think it is interesting, the difference in the dynamic in the marketplace, and I've been observing some of that along with my team. I think some of the very large lenders have been out there and had programs in place for 18 months because I think just the magnitude of the effort that would probably be needed, whereas others have been looking at this and saying, as you say, it's disproportionate to the amount of either cases or people I've got. So therefore, actually, I need to understand this consultation and then I'll put something into place. So I think it's really interesting, the dynamic across the market and how that will unfold over the next 3 to 5 months, especially as I think the FCA has come out now and said, could you have a plan in place within the next 6 weeks? So a lot of people will be moving forward with that, but I think it'd be really interesting to see if people do push back because it just doesn't give them enough time. So that probably leads really nicely into our next bit, really. We just wanted to put a poll into the room to understand exactly where people were. So, Brian, if you could just ping that up, and then hopefully we can get people to just give us a feeling for exactly what they perceive as their position at the moment. and with all good things. Yeah, it worked wonderfully earlier, and then all of a sudden we can't get it. Yeah, perfect. There we go. So hopefully you can now all see that in front of you. If you would like to just indicate which one of those you are in, it would just give us a little bit of a feel about where the market's at the moment and what your key challenges are. Okay, brilliant. It looks like most people have now kind of contributed that, and we're getting some guidance on that. It seems that we're evenly split at the moment with regards to getting the data in place and then tracing the people and then putting in place the right operational model. They are obviously one of the significant concerns. It does, however, appear like the claim inquiries coming into you are probably causing the biggest burden at the moment. So that as we get into that memory gap phase that I mentioned earlier, then hopefully linking into some of the conversation around the app and how that could help, or even potentially how we can work on the systems in order to get that sorted would be good. But thanks a lot for that. Yeah, we might circle back, and obviously as people contribute to these, we'll be able to provide them out. So there's a little bit of conversation there, specifically from Jason, around the data gap, and obviously we're seeing quite a number of you are concerned about that at the moment. So I think at this point it probably turns to Anne just to give an indication about how you would be tackling that, specifically around this new initiative of Scheme 1 and Scheme 2.
Yeah, thanks, Robert. That poll actually was quite timely for the what we're looking at for this one. So obviously what's coming up there is as lenders, you need to find out where your customers are, where your previous customers are. We did take a look at this when the consultation first came out, and we found that up to 47% of people had moved address from the address that was notified to the lender. That obviously does start to drop as you get closer, but even in 2021, we were still seeing that 20% of people had moved address from the address that was actually notified to the lender. And I think Jason touched on it earlier. It's really great news that we're not going to have to do recorded delivery by postal mailing, because I think that was going to be incredibly expensive and take a lot of effort. But we are aware, obviously, postal channel, that still remains absolutely a key part of how we're going to contact people. And people will probably see in the policy documentation, the FCA are kind of recommending where you can to have 2 communication channels. So if you've got postal, also see if you can get an email address for those people. So the challenge is, how do you do that? How do you find the people that have moved, and how do you get potentially an alternative, or that becomes a primary contact channel? So if I can call it good news, I don't know if anyone will see it as good news, but from the credit reference agency point of view, tracing people, we've been doing that literally for decades. It's what we do. It means everything's established. We can set people up really, really quickly. We're talking just like a couple of days. They're also highly reliable. They're also flexible. And effectively, you can just send a file in of names and addresses, and we can bring all of those addresses bang up to date and actually give you evidence that a person is resident at that address. So you're starting with a clean file for those customers that you've currently got but may have moved. If you then did want to look at an alternative contact option, such as email, and I know telephone numbers are also in the policy strategy, but they're saying you can't use telephones to actually contact people formally. It's more just to maybe get an update on their contact information. But you can obviously then look to append email addresses and telephone numbers to a customer base. Again, there are multiple companies out there that do that. We obviously have one of those, but it gives you that mix of then you've got alternative contact channels and you've met that requirement for the FCA, because I think they're very keen on lenders are seen to do as much as they can to find these people. So that's all about getting your data up to date, making sure you've got up-to-date contact information. The other one that's referenced in the poll and by Jason earlier is that data gap. Yes, you've got the 2 schemes now, which I think is a recognition from the FCA. It may be more difficult to find data for consumers going back to 2007. But within Equifax, we have that data. We do have auto finance agreements or motor finance agreement dating back to 2007, and we've got whole data repository, and it's literally fully aligned to this scheme. So the accounts start on the 6th of April 2007, and it goes up to the 1st of November 2024. And what that has, so when we be talking to lenders, there's a bit of a mix out there. So some have got names and addresses, but maybe they haven't got all the account information. So using that repository, you can send in your names and addresses and we can fill those gaps for you. But I think for a lot of lenders, they literally don't have that data going back to 2007. So this is more of a case of we do a bulk extract from the database. And obviously we can add that onto the file. So you've got all the ones you've got the names and addresses for with all the relevant account information. And then we can plug that gap for where you literally don't even have the names and addresses of people that had those accounts going back to 2007. And I think the other thing that's worth mentioning is we can append all the account information, but we can show that at a monthly level. So if somebody's gone into arrears, for example, over the term of the agreement, that can impact what redress payment they're entitled to. So this data that we've got will actually show you month by month what the account status was, how the balance drops, if there's any change, if it didn't drop, the payment wasn't made, etc. You can take all that data and we can send that back to you. So the data itself, you can get that via batch. And I think we've touched on it. The timeline's the thing that's probably going to be the issue here. We've got to get this data, we've got to get it up to date. We've got to get this cleansed data made available. As I say, these are established processes, and that is one element of good news. We're not building anything. There's nothing innovative here. They're all standard services. We can set them up really, really quickly. And you can get that by sending one file in. You can literally get any gaps in account data that's missing, any name and address data that's actually missing as well. And if you want those additional contact data, email, telephone numbers, it can all be done as part of one data file submission.
Great. Brilliant. Thanks, Anne. Just picking up, I said that I've been monitoring some of the questions online, and Angela, I think you raised one as a smaller independent lender. So hopefully answer the question, but basically, yes, we can help you get that information going back as far as 2007. What's been really interesting for me working out in the field at the moment is, we've been talking about the degree of movements and going back to 2007 for a while, but what's really brought it to life is when we've actually launched the app, because I think it's become much more visible to the consumers and to the marketplace that we've got that information available and we can help you. So whilst I think Anne touched on it there, that we've got calculations and provisioning levels that obviously this can feed into, we won't have exact understanding of the deals that you may have done with the garages or whatever that may be. So you'll have to find information there, but obviously it gets you a whole lot closer than not having that information at all. So yeah, we have got that data gap, but hopefully we can help you bridge that and work with you on that one. So thanks a lot, Anne. And I think it was also really interesting that the FCA referenced that and the CRAs in their paper. So that's good. Okay, so moving on to the next section. Question for you, Adrian, really. What's your perspective on fraud in the marketplace? Because I think we've just had a discussion there about the fact that we will either be having to write out or communicate with millions of customers as part of this program. And that, in my view, creates an opportunity for fraud. So I just wanted to understand a little bit of your view and your members' view.
Sure, very much agree. The plain fact is there's potentially £7.5 billion going to be around, and wherever there's that amount of money involving potentially 12 million customers, then that will create the wrong incentives for the wrong kinds of people and organised crime groups. That issue has already begun to crystallise. And I think many people in the call will recognise the various different MOs out there. Falsification of customer, people pretending to be the lender, people pretending to be you, probably, people pretending to be all kinds of people in the process, people pretending to be the FCA, in fact. So all that done on an organised and an individual basis is entirely predictable. Now, the FCA do recognise that, absolutely, and they've been, let's be honest, been very helpful in recognising that, and hence there are tools already that were launched on Monday for consumers to use the FCA website to check the veracity of someone claiming to be a lender, for example, and then routing them to the real lender for those involved in the scheme, and that's very much to be welcomed. But equally, we and the FCA absolutely recognise that this will evolve day by day. And so we're very much going to be on the alert as issues crystallise in real time as this goes on. But at the end of the day, the relevant regulatory authorities, not just the FCA but others as well, are aware of the potential here. And we have processes in place to recognise issues as they emerge and create solutions. But it is very real, and I think all lenders will want to build in systems and processes into the scheme that recognise the real risk of fraudsters getting involved here and building in checks and balances. Some of that is to some extent a bit like business as usual, because people there are fraudulent applications for credit all the time. And there are lines of defence built in for those. Those will serve lenders well in this context too. But there will be different actors on this one coming in, and so traditional tools won't be enough. So there does have to be more. But yes, it's a very real issue in a significant way.
Yeah, I fully appreciate that. And Jason, I don't know whether or not there's a similar view from your members as well.
Of course, I think Adrian makes some really great points about the prizes available there for fraudsters, that we will absolutely see them coming in at different angles, pretending to be the lender, pretending to be the customer, pretending to be the regulator. That absolutely we expect to see that. And I think what we're worried about as well is not just the fraud, but also that impact on the operations as well. Because unfortunately, we have experience from other redress schemes where the fear of fraud then in itself causes more problems, because when you try and engage with individuals, with customers, it becomes more difficult for them to trust you. We've seen that, as I said, in other redress schemes where lenders have tried to get in contact with customers to give them back money, and the customer will not engage because they're worried about fraud. So the worry of fraud becomes its own problem from an operational perspective as well. I mean, I will be a little bit controversial and say that there's also the possibility that we're going to see problems with regulated firms, by which I mean CMCs and legal firms. We've already seen them claiming, we've seen three or four firms claiming to represent a single customer. We've seen many occasions where there's more than that. And I think we're worried as well about that, about the concerns that our members have about sharing sensitive personal information and data with organizations that have no right to see that information, and that brings in issues around the information commissioner as well. So we kind of think that there is two levels. There's a spectrum to this, from organized crime and organized crime groups through to others that are looking to exploit this, and they're on the edge of, I would say, on the edge of fraud by doing that.
Yeah. No, two really good points there. I think the FCA recognised that they would like to have a single point of engagement across this process. So I think that's a key thing. And your point as well, we've almost been conditioned recently into thinking that anything that we don't expect is fraud. And therefore, all of a sudden, when you get this SMS, you get an email, or you get a letter through the door asking you to provide all your information going back as far as 2007, could be worrying for some people. So, yeah, even myself, I've had my bank contact me a couple of times recently, and it's, I've had to think two or three times on that, even though I'm expecting the communication, because it's now conditioned in us, which is a good and bad thing, I suppose. But yeah, we need to get over that. So thanks, Jason. Thanks, Adrian, for those opinions. And I don't know whether or not you want to add anything in there on the back of that.
I'm just going to make it even more scary, I guess. But as you can imagine, it's going to be massively attractive to fraudsters. And obviously, for a lot of lenders, they may be spinning up new contact channels for this. So they're going to have to introduce additional fraud tools. I think one thing from my side is the beauty of fraud solutions is you can layer them. So not everyone has to take one tool that maybe doesn't fit for all of the different channels for their own approach to fraud prevention. And obviously, there's a budgetary consideration as well. So I think that's one of the key things. I think the key thing is it's got to be identity verification. If someone's coming into you, maybe with an inbound complaint, you do need some form of identity verification. Know your customer. Maybe just check if someone's logging in, for example. And I think that is one of the key messages that we're seeing. If you can get that consumer in some kind of digital journey, you're able to then apply a lot more of these standard fraud checks whilst reducing the friction. That's the other side to this. You don't want to create a load of friction when a consumer's trying to come in and make a complaint. But you can put online tools in. So a KYC, I know your customer, someone comes in, you ask them a range of questions. They've got to obviously answer those correctly before they get to actually speak to somebody or to make an interaction. You've then got things where you're looking at devices. So you can see how a device is being used, where it's based, its geolocation, if it's sitting behind a VPN. These are all things you can just put in the background so it doesn't create any frictions for consumers, but it does obviously try and protect your business from fraud. I think the one thing I absolutely would add, and it won't be news to anyone on the call, at some point you're potentially going to pay that consumer some money, so it's absolutely essential you're checking the bank account and making sure it's going to the right person. Obviously, that's further down the process, but that is absolutely one of the key kind of safeguards that should be introduced at this for this process.
Yeah, no, I completely agree. And, I've been talking to customers out in the market, and I think it is very much a layered and risk-based approach, with some people taking more of a risk-averse approach and putting lots of processes in. I think the other one as well is just around perhaps some sanctions on this situation as well, because I think, if you are paying out on average £830, I think that probably needs checking as well at the same time. So thanks for that. I think at this point we'll move on to the second part now. So I introduced this as the memory gap. I'm thinking about this myself. I've had probably 4 or 5 cars over the period that we're talking about, and whilst I could probably tell you what the last one was, I don't really know what the one 4 or 5 times ago was. So at this point, I wanted just to go to William and understand a little bit more about how we've geared up to try and help with this situation.
Yeah, thanks, Robert. Yeah, so as you said at the top of the call, Robert, we've had the opportunity to release our app, and I'll go in detail on how it works for those who haven't had the opportunity to use it. It has been spoken about on Money Saving Expert through Martin Lewis, which we think has been a great thing. And then also there is a link to it on the FCA publication website as well since yesterday's announcements. So we are expecting a lot of consumers to engage. A lot have already. So I'll run through now, what are they getting and what's the value to the consumer, and then we'll also just briefly touch on how that could potentially support any lenders out there in terms of how it may be tied to that. So as you'll see here, once you've downloaded the app, so we've got it available on Apple and Google, you can sign up for free. So we are not, this is not part of our standard subscription product, the one that helps with your score and report and improve your credit health. Consumers are free to do so on our website. Our app is focused purely on offering this auto redress for free. So as a new customer, you can sign up for free. If you already have an existing account and you are using our services, which is great and can help you there on that side, you can log in with any credentials. So it's not limited to any specific account. But if you are signing up, we put you in the free experience. I'm not going to run through that specifically on this call today, but I will quickly touch on what it does, and it ties a little bit into some of the discussions we were talking about KYC. So you would provide your personal information, your name, address, and then that's used to help match you on our bureau. We also create a username and a password. And then to authenticate someone, we go through a sequence of steps. We use our knowledge-based verification section that allows a consumer to answer questions that they should know only about their reports, and then that's a way to authenticate them. If they don't achieve that, failing that, they then also have an option to do a biometric upload, and then that gets approved by our customer operations team. So we do, and we make every effort to make sure that it's the right person. So based on our security measures, as well as then have a lot of options to make sure that someone can get through if they do seem to struggle with certain elements of the sign-up experience. As I said, you get the basic account. So I'll show you what that looks like now. So I've got an account already. So I'll log in this case. Now, again, with obviously our standards and the level of information that we hold, we do have things like multi-factor authentication. So on first login, you would do that, and that's linked to your email address. Type in that code. You do that only the first time. We do use device tracking tools, which Anne referred to as well, and then that kind of creates a signature to make sure that we're not putting in that friction every time. So as you see here, once you've logged in, because it's the basic account, you get your free score. That's updated monthly. Obviously not the key focus of the app at this point. We are gearing it towards the auto redress section. You will have access to your credit report on our online experience. You click through, you'll simply just go through that. Our online experience is mobile friendly, so that becomes a seamless experience. And then we do have links to our Money Hub in terms of other products that someone may need. But as I said, my main focus here is on the motor finance agreements. In this case, the demo here has four agreements across the period. As you can see here, the 2007 to 2024 period. And we list them out there. We make it clear how many you have in this case. So I'll just go through to the first one. So once someone selects that, they can then have a detailed breakdown of the information that we have at Equifax on that agreement. This is the same information that we do provide to lenders to be used, as part of the redress. So we're using the same API. If anybody wanted to know technically how we're doing that, so it's a like-for-like information set. What we have done though is we have filtered out some of the information, because that obviously includes payment history and other things, which is part of what we do as the bureau. So we've simplified down to what we believe is essential for someone to understand what they had, and then if they have ongoing conversations with redress members around what that agreement might be. So I'll just quickly highlight what those are. Obviously the lender name. We have an account reference. Now this is a reference that is passed to us as part of our bureau mechanism. This may not be the policy number. It's a reference that every lender has provided in a unique way to us, and we do explain that to the user. So that also allows any lender to then do that matching on their end if other records were in place on that side. We obviously have the types of agreements, the two types in scope. We know what details was on that account with the name, the date of birth, and then obviously as we spoke about earlier, in terms of contact and the addresses, we are displaying the opening address and the last address, not showing the whole history, because that's not particularly relevant to a consumer in this case, with our start date on our end date. We've also elected to introduce the starting balance, and then that's also another way of just identifying exactly what that agreement was for what size of agreement that was. We then have an opportunity to move on. So what can a consumer do with this information? Now, because this is an FCA scheme, we've got links to that, so consumers can help inform that. So we've got links out to that information. And also what we've done is, of the 190 lenders in scope on our records, we've actually looked at what is the best contact information. So we've sourced publicly all the websites of the lenders that are in scope, and then it's just to the main pages of the lender. So it's not to a particular complaint form or anything like that. We are open to helping a lender with that. So if any of the lenders on this call would like us to link to a specific section or help populate on their end, we're really open to any sort of proof of concepts and those sort of things. And then also what we've done is we've got a share agreement functionality. So this is what you get natively in your mobile app experience. I'm sure everybody's been familiar with that over the years, and that allows you to share text, images, and URLs. In our case, we're using the text. So all we're doing is we're capturing the information that you can see on the mobile app, so that you can easily keep it. So in this case, you can send it to your notes, and that's done by default. You could also have an example of if by chance you had some contact details, you were in a conversation with a lender, you can either send a text message to someone or an email. Again, these are not populating any to or destination at this point. But there's scope to add that in on an ad hoc basis if any lenders are particularly interested in that. So, and then we've got some support and those sort of things. So, yeah, that's the long and short of the app. So I welcome, I hope everybody gets the opportunity to use that. Like Rob said, he didn't know what he had in the past, and we've seen some good results. Over 80% of people had more than one agreement reported now on our system. So it is providing what we intended. So yeah, Rob, that's it from my side.
Thanks, William. We've just got a couple of questions that I'd probably like to just jump in on at the moment. So one question is whether or not this is being advertised, and the answer is yes. So just taking one step back, we actually worked very closely with the FCA on the launch of this app, and then we've actually been talking to the media. So you may have seen on a couple of occasions Martin Lewis doing this on his show and coming forward and encouraging people to understand it, because it is what we didn't go into was kind of like the methodology behind this or the thinking behind it. We were looking to empower the consumer, but at the same time get a better quality outcome for you as the lenders, because the information that would be coming through would be linked to that. So hopefully that works. And I think what I'd like to do now is just maybe, Jason, if I could catch up on something with you. We've got a couple of questions that have come through the poll. One on high proportion of claims coming through from intermediaries or professional representation, and then some questions around some of those may not be that honest and open. So questions about exactly who the intermediary is. So I just wanted to understand from your perspective about the applications that are coming through to your members and the quality of them, and then potentially some of the risks and the processes that you're looking at.
I think we're kind of influenced by some of the experience we've had in other areas as well. And we've seen some of these CMCs and legal firms come from other areas, come from affordability claims, kind of vulnerability claims, and are focused on motor finance now, and particularly around commission. So it's not a new area for any of us. And ourselves and the FLA have spoken about CMCs and professional reps, legal firms. We consistently talk about, we consistently raise complaints to the FOS and to the FCA and to the SRA about these problems that we're seeing, because we are seeing, we often see a deluge of complaints from a single firm or a deluge of DSARs, and the percent that when you break that down and you look at the number of duplicate claims, the number of claims that have already been dealt with, no loan claims where there's been no contact with that customer ever, and yet they've kind of said that they've got a complaint against a firm. The quality is really low, and we keep raising that with the regulators to make sure that they're aware of that. And I think we're starting to see some action. Certainly from the FCA, we've seen action in recent times to try and tackle some of that. And now I think we're starting to see the SRA get a bit more focused on this as well, which is great, because people on this call will know that mostly it's legal firms and not regulated CMCs that we're seeing involved. And so the SRA has a really important part to play in terms of tackling that, because I think generally the quality, which is where you started, the general quality can be really low. And it can be the kitchen sink as well. It can be, we want you to check whether there's a commission, but we also want an affordability check. And we also think our customer had a vulnerability. No evidence to prove any of that, but we're just throwing it in to make you investigate it, to make you do the time, put the time into this particular claim. And obviously to put pressure on lenders to come to some kind of conclusion that is in favor of the CMCs or legal firms. So yeah, we're seeing lots of claims. Lots of those are, do I have a claim at this point? A lot of them are coming through CMCs and legal firms. And every inquiry needs to be assessed. Many are not going to result in redress. And that's going to put us all in a difficult position, because the environment we've been in for the last few years is CMCs and legal firms telling the world that there are thousands of pounds worth of redress. It's not that long ago since we saw adverts where it'd be £12,000, £15,000. These are the amounts that you can receive. The reality is the majority of people are not going to get redress. And when they do get redress, it's going to be much smaller than they expect. So we're in a really difficult position. And that makes it really difficult for us operationally.
Thanks, Jason. Yeah, Adrian, I don't know whether or not you want to add anything on from the FLA perspective or not.
Yeah, very much so. And I echo everything Jason has said there about the backdrop here. I mean, the history of this dossier is that there has been effectively the wrong process for this, where many, many millions of people have clicked on something online and through social media, and that's generated what counts as complaints in the regulatory system. Many millions of those, most of them unfounded, most of them unevidenced. And it's down to lenders to sort it all out at enormous operational cost, including cost of reputation. And if wouldn't it have been better if there was a process with more integrity like this one available much earlier, where a customer could effectively click on a button through an app and say to the lender, I know this 15 years ago, and I don't know if I'm entitled to redress, but this is where I am now. This is me. Then that customer ends up keeping, if they have lost out and they're entitled to redress, they get that redress in full, not the 36% deduction that you get with a CMC or a claimant law firm from clicking on something on social media at 1:30 in the morning, which is how a lot of people have done this. We know of examples recently where one consumer signed up to 23 CMCs or claimant law firms and a Martin Lewis letter as well, which wouldn't have lost them the money. So yeah, this is the wrong way to do something historically. Whereas a process with integrity like this one is the way to go. Yeah, for sure.
I think exactly the point there about the social media campaigns. Tick here for us to search your credit file. Deep within the small print, which is ironic, isn't it? Deep within the small print is, and by the way, if we find a case, we will take it on your behalf. And people therefore doing it 1 week on one social media and then coming back and doing it again, and suddenly they're being represented by 4 or 5 different CMCs. There are brokers out there that we think, information brokers, that we think have been guilty of deliberately selling to more than one CMC at the same time, knowing that they're doing this, but thinking that this is a little bit of a gold rush and that they can do this over a short period and get out with the money. We've definitely seen that happen as well.
Thanks both. That's really interesting, especially the point around, the problem is coming from the unregulated firms, as you would expect, really. And I think the message in that is, let's engage to get good quality information into the lenders, and at the same time, make sure all the appropriate checks are in place, because don't rely on other firms in order to do that, because I know we've got some questions in there. I would do my own due diligence on everything that comes through the door. So thanks for that. So moving swiftly on to the final bit, which we talked about, the process gap, which was the third one. And I think this specifically links to two things, really. One is the 6 weeks where you've got to come up with a plan. And then finally, the 3 to 5 month implementation period that we discussed a little bit earlier on. Adrian, I don't know whether or not you would just want to touch on what your experience is of the landscape, really. The customers that are going to BPOs, the ones that are doing it in-house, and the ones that are doing a hybrid model, I suppose.
Yes, I think the boring answer in many ways is it depends on the type of lender you are. Many will routinely outsource a lot of their operations. Many have the capacity to build internally, and this is no different to that in many ways. I think a driving force for pretty much every lender here is that people want to deliver the redress scheme faithfully, and ensure that a customer, if they've suffered loss, get redress quickly and professionally, and hopefully retain that customer in the long run. But a key driver here in terms of determining your operational processes and potential outsourcing is This is we're not just talking about the past here. There are current operations providing motor finance to millions of people that need it to get to work, get to school, access society right now, and that business has to continue and not be affected by this process. So protecting the core day-to-day job of the business is absolutely a central consideration. As Nicola Ratti, Chief Executive of the FCA himself said on Monday to the media, the country needs a competitive, active, growing motor finance sector that serves millions of people with good quality products. That job continues right now, this very second, and I think a real driver for everybody looking at how to operate the scheme is how do I protect my core day-to-day business of my customers without it being adversely affected by the scheme. So many will conclude that outsourcing elements of this and bringing in softwares using APIs is the way to do it to protect the core. But I think enabling firms to protect the core business going forward is in absolutely everyone's interests, for sure.
Jason, I don't know if you want to add anything to that at the moment.
I think Adrian gives a good view across the sector in terms of, I think that it does depend on the scale of the organization that you're in, the complexity of the issues in front of you, and always there's a question over control about how much control you will have going forward. So those three dimensions are always going to be there: scale, complexity, control. I think for many of our members, particularly the smaller members, there is that pressure because they don't have that internal resource. They have that pressure there, but at the same time, they know that using that will come with a premium, that there'll be a premium on that cost. So there's that. I think in so many areas that we're looking at just now, people are looking at whether technology can help, whether artificial intelligence can maybe help with that kind of scaling up as well. But it's going to be horses for courses. And if I was to say on average, I think there will be kind of a hybrid model of some outsourcing and trying to keep as much as possible in-house as well. That's probably where my members will land, is a kind of hybrid between a kind of balance between the two, outsourcing and keeping in-house.
Yeah, great stuff. Thanks. And I don't know whether or not you want to just add a bit to that.
Yeah, I think it's a very valid point. For some lenders, it'll be no choice; they'll have to outsource to protect their ops team. I think the other bit, in addition to that, it's not just protecting the operations team; it's understanding. I think somebody mentioned it in one of the messages. The overwhelming amount of inquiries that are coming in. You've got to have an audit trail for anything that you are doing. You've got to present evidence where you have contacted your consumer. So you've got to keep a log of all of these. So it's something we've looked at. As I mentioned previously, we've used a lot of our existing solutions for this, so it's nothing new. We've taken a current solution and tweaked it slightly. We've got a service called Redress 360, and it's a digital platform. So I mentioned earlier, if you can get your consumer into some form of digital journey, it can save cost, it can be quicker, and you're capturing those audit and that evidence requirements. So in this particular product, I feel very salesy, apologies, but it's a new platform that we've built that I think it hits a lot of the pain points. Is that affects as a lender, you can load your customer data into a portal, name and address, and what you need to do for that particular cohort. For example, you've got to contact all these people that need to opt in. So you get that file loaded, it can trigger a letter out to the consumers. In there is a link. If the consumer access that link, they've then established a digital relationship with yourself. They effectively come into the same portal. And you can have a little button that says, okay, as a consumer, I want to opt in. They can click on that. It's all captured, all the audit trails, all the evidence is there. Similarly, then the next stage is you might have to do provisional redress. So similarly, you can load a file going, this is the redress that I'm proposing, and it can trigger an update within that platform. The consumer then just literally logs in and goes, yeah, I accept. So it makes it all digital. And as I say, it'll take hopefully some of that pressure off the operational teams, but keeping that audit trail and that evidence that the FCA are going to require.
Yeah, brilliant. Thanks, Anne. Yeah, it is a pain point, and it's interesting that you said it's a sales pitch from the least sales pitch person in the business, probably.
I know, it's very awkward, but
yeah, so I think it is genuine, though. I think we heard Jason earlier on and saying that, especially his members at the smaller end, are probably looking for solutions that they can get going on pretty quickly. So if we can help in any way, then obviously it would be wonderful to do so. We're just getting towards the end here, so going to Adrian then. Adrian, what's your focus for the next days, weeks, months, and how can your members engage with you, I suppose?
Sure. Well, I think members engaging with us is a minute by minute affair, to be honest, 24 hours a day. So there is an immense amount of work to do. The scheme has been published. There's 1,134 pages of it. And I don't think if anybody claims to have read every single one by now, less than 48 hours in, I'd question them. But there is a lot to absorb here. There are some very, very tight deadlines involved here. There's obviously people know about the 3-month and 5-month deadlines. There's also, scarily, for a lot of colleagues in the industry, for senior managers, have to attest to the FCA pretty much in blood within 6 weeks that they have the plans in place now to implement the scheme faithfully with all the systems and controls in place. That's really scary. Processes like this obviously help in that, in providing some integrity into the process and accuracy. So yes, there is an enormous operational focus right now, started on Monday. Well, we've built on what was already built by Monday, but these deadlines are extremely challenging, and that is a 24/7 job for the next few months. But at the end of the day, at the highest level, the focus here is to ensure that where a customer has suffered loss, the customer is provided with when that loss is redressed quickly, seamlessly, professionally, in a way that the customer can engage with. And the industry can retain those customers. Those customers can have confidence in the sector in the future and continue to engage with motor finance to acquire the vehicles they will need in the future affordably and professionally. So this is critical here, but it's a big task coming up ahead.
Yeah, completely agree. I think having the consumer at the heart of everything we do needs to be obviously the focus. We've got many, many years to provide vehicles going forward, so hopefully we can maintain that confidence. Jason, what do you expect to be doing? Something similar, I would expect.
I think so. I think both Adrian and I live in a policy world where we're very used to how policy is developed, how it emerges, how it develops, how it crystallizes, how it becomes a regulation, how that regulation is then adapted and developed, and we're very used to that. So I think it's sometimes difficult for people to understand we're on a journey. This is just another stage in the journey. For us, we were not as involved in DCA and tidily, so we've not been as long in this particular journey, but it is a journey, a path that we've been on for some time now. That continues on Monday night. Within half an hour of the document coming out, we were in contact with the FCA and talking to the FCA and trying to get some first comments in, which was difficult with 30 minutes notice. Yesterday, we had the webinar with the FCA that I know many industry people attended. Today, we'll be speaking to the Treasury later on to give our first thoughts. It is a process that will continue on. So this is not the end. And I think that's what I would say to everybody. Stop, consider, discuss internally, externally, think of your questions, gather what you need clarification on, engage with us, engage with the FLA as well. Other trade associations are available, but engage with us so that we can take those questions to the regulator, to the government, and get more clarification. People have been talking to me about ambiguity. Ambiguity is not always a bad thing. Ambiguity sometimes allows us to move interpretations and to move the dial slightly one way or the other. So keep talking to us, stop, consider, discuss, gather those questions, engage with us, and we will take this forward.
Brilliant. Thanks, Adrian. Thanks, Jason. So just in summary then, and going back to the agenda, we had an objective to dissect Monday's announcement, which hopefully we have done, and then we had the 3 gaps, which were the data gap, the memory gap, where obviously we're trying to use the app to try and increase quality. And as William said, we're open to linking to YouTube in order to get seamless benefits from that as well. And then the process gap, where potentially we can help you over the next 6 weeks as those plans come together, or even sooner, obviously, because this is obviously a race against time. So my details are now on screen. I would love to be in contact with you over the next few days and understand some of the challenges you've got. as Jason and Adrian said, their door is open, so please do come and communicate with them as well. They will represent you. Alternatively, you obviously have a route into the FCA as well if you're not in any of those associations. But please do reach out to the business and get in touch. Just by way of an update, this webinar will be recorded and will be shared going forward, and we will be also sharing a number of materials off the back of this, which link to some of the topics that we've done today. So hopefully you can have a look at those, digest them at your will, and then come back to whoever you need to talk to. But I think the overarching message, I think, is it's Easter eggs and laptops this weekend, because we're up against the time. So I wish you well with that, and hope to be in touch with you very, very soon. So thanks for your time.